Hey guys, hope you are all doing well and having a great day so far. It has been a while since we last talked and a ton has happened since, but before we get started, I feel the strong compulsion to take 30 seconds of your precious time and just brag like a degenerate narcissist. For the last couple of weeks, we have been hitting home run after home run on my Discord. As you can see through the following images, almost all our alerts have been green, yielding large amounts of profits for our members. Just today, as market pumped to the moon while Jerome Powell spoke, we issued a total of around 15 alerts, and we came out of all of them green. It was a magnificent day-to-day trade, with members yielding very comfortable returns. But it isn't even just today, it's literally been like this for the entire month of February and almost all of January except for 2 or 3 days. If you are a day traders, or have been thinking about becoming one, or are just morbidly curious, come see for yourself, don't just take my word. Let me show you what you are missing out. You can partake in this for free by just clicking the Discord invite in the video description or the pinned comment. It's that easy. With that said, let's begin. We need to talk about the Fed, the markets pumping to the moon and the new challenges and uncertainties that are brewing over the markets. For such a huge spike, the S&P 500 sure doesn't seem to be able to maintain an upwards trend, implying the market, as stubbornly bullish as it is, still remains clouded in doubt as to whether this run is warranted. My opinion remains the same as explicitly stated on the last video. I remain bearish until the full economic conditions of the United States significantly improve. A better-than-expected CPI report does not offset the fact that we are still dealing with high inflation with great potential for deflation. A dovish Jerome Powell does not inspire confidence in me to say we have bottomed out completely when new reports show slowdowns in economic improvements that could spike up inflation, and an all-of-a-sudden bullish Janet Yellen does not immediately calm rising international tensions between the US, China and Russia. The comments said by Jerome Powell surely pumped the markets as investors loved the easing of high rate hikes, but that does not necessarily mean that the fight against inflation is easing off, something he made very clear. On our last video, we talked in detail about the high amount of credit usage by the middle and lower class in order to meet financial responsibilities. Since then, a flurry of new reports concerning the vicious debt cycle have been coming out. This is a very concerning reality that we shouldn't brush off. A lot of people do not have enough income coming in to support day-to-day expenses, and it will continue to be put on credit cards, ensuring the persistent cycle of debt remains for longer than it should. And what's worse, because wage stagnation in America is a thing along with the unlikelihood that prices will come down, it means that Americans will be stuck or increase their debt over time. It is a very serious concern that I am happy to see others beginning to talk about. So, last week Jerome may have been bullish, but those earning reports sure weren't. Apple, Meta, Microsoft, Amazon and many others left investors wanting much more. Earnings were incredibly weak as expected, and the forward-looking guidance was even more bearish. This means that big tech is expecting worst performance to come in future earnings, something I spoke about in previous videos. Remember, the effects of rate hikes often take a while to take effect, but you can be sure they will have substantial effect on companies' earnings, and that was the case here and for the future of 2023. Still, the market had an appetite for a bull run, and so it did have it. With the Brea trend broken, it will be interesting if bulls can sustain it or if this is a huge takeout before the rug is pulled underneath our feet. Switching over to the housing affordability crisis we are going through, it appears we have reached a new milestone. For the first time ever, the average renter household in this country is paying 30% of their income on rent, meaning they are cost-burdened. When Moody's Analytics started tracking housing affordability more than 20 years ago, the average household spent about 23% of its income on rent, and a decade ago it was just 26%. By the end of last year, the average hit 30%. The cost of just living, just affording a rooftop, has risen to the point where it is hurting households big time. When people have to spend so much money on rent, they have less to save for a down payment to buy a house, essentially trapping them on a cycle where they have to work harder or get a better job, but with rents going up over the long time, they are unable to save enough to move out into a home, essentially staying stuck paying rent. Moody's Analytics also highlighted some concerning findings that didn't necessarily have to do with housing. Americans are also spending significantly less money on food, less on school supplies, less on healthcare and even clothes. This is because the price of all these essentials have gone up significantly. All in all, Americans' financial state remains pretty much the same, and as I have said before, the longer it continues being the same, the higher the odds things crumble down. But still, these things have little to no weight in stock valuations, as markets rallied to the moon today after Federal Reserve Chair Jerome Powell said that additional interest rate increases will be needed to cool inflation and borrowing costs. In a statement that should have sunk the entire stock market, Powell said, and I quote, "We think we are going to need to do further rate increases. The labor market is extraordinarily strong. If the situation were to remain very hot, it may well be the case that we have to do more." I was day trading today with the peeps on my Discord, as we witnessed stocks and treasuries rally after Powell spoke. Powell was asked if he would have raised rates by 50 basis points last week instead of the 25 basis points as officials did, to which he responded that the Fed do not get to play it that way. Nothing Powell said was honestly surprising or shocking. Stocks rallied because the market is desperate for a bull run to a new high and investors don't seem to care about economic conditions weighting in the valuation of companies. If we had to summarize the interview with Jerome Powell, I would say that Powell's main point was that if the labor market data continues to come in stronger than officials expect, and inflation begins to climb, the Fed will raise rates. Powell repeated that he is concerned about inflation in the core services excluding the housing sector, and that the labor market remains too tight. He admitted that getting inflation down will be a difficult process that will take time. While there should be significant decline in inflation this year, it will likely go into next year. That was the main key takeaway if I had to summarize it. Again, nothing particularly new, he said the same stuff we have been repeating for over a year, which inflation too high and potential for higher rates is still on the table if things don't cool and go back to normal. Now, I do not want to pretend or appear to be a perma-bear who is too cynical and biased against markets. I do want to say inflation has been cooling. The Fed seems to be relaxing on their stance. It is clear that they are beginning to take control of things again. We are looking at a brighter future than what was a year ago. These things are 100% correct, and being bullish while believing we bottomed is a very respectable posture. All I mean to bring to you guys is the information by which to make decisions. The fact of the matter is simple. There are still many factors in this economy that aren't bullish whatsoever and could have huge ramifications in the markets, offsetting any bull trend. In fact, don't even take it from me, take it from the CEO from America's second largest bank, Bank of America. Brian Moynihan told CNN that he hopes lawmakers resolve their issues because the market and economy love stability, stating that he fears that the country could default on its debt, and that this possibility cannot be ignored willfully. He commented that Bank of America is preparing for this event, not only in this country but in other countries around the world, hoping things don't come to this, but noting that hope isn't a strategy, so they have to prepare for it. It is unlikely Congress will allow the US to default, but it is a serious possibility at the table right now. So as bullish as we might want to be, we have to remain grounded on the key catalysts that need to happen to confirm and green light a strong economy, giving way to a market rally that will long last and elevate us to new highs in time. Now, let's talk about AMC. The theater giant is rolling out Sightline at their locations, a ticket pricing initiative based on seat location within the auditorium. This will be similar to music concerts and sporting events, as moviegoers will have the option to pay more or less for admission depending on where they choose to sit in the venue. Of course, front row seats will be available at a lower price while seat in the middle of the theater will be available at a higher price. This initiative kicks off on Friday at select AMC locations and should be expanded to all domestic AMC locations by the end of the year. There will be 3 different seat pricing options. These news, of course, did not come without controversy. These news actually stirred a lot of chatter about whether this is a good move or not. I saw various posts on the popular category on Reddit, with the vast majority of people saying they did not like or approve of this move. On the AMC groups, it was more of a 50% approval ratio. Tons of divisiveness appeared to erupt from this announcement, and it's one that I am wondering how my audience feels, so please do let me know your opinion in the comments below. I am looking forward to hear what you guys have to say about this. Personally, I think it has the potential to really bite AMC. The last thing you want to have a decreasing number of moviegoers to feel is like they are being ripped off, which is what I saw in most comments I scrolled through. Not that I think AMC is aiming to rip people off objectively. But I do think it's a risky bet that we will see if it helps AMC boost revenue streams. I have been getting tons of flack for a lack of coverage regarding GameStop, but the truth is that the company's public appearance is non-existent. GameStop is literally non-existent when it comes to significant news that could help it fundamentally. They aren't making any moves, at least not publicly, and seem to be just barely holding on. The last thing they did was the NFT marketplace project, which ended up blowing up in their face as it was launched right as the bear market started and the crypto winter begun. They could not have timed that any worse, not that it was their fault. The truth is, I see GameStop following suit to what Bed Bath & Beyond did. I see them making an offering to generate money if their revenue in stores, both physical and electronic, fall. It is looking very grim for GameStop as a business overall right now, and I would love to hear more from the CEO and their plans to restructure the company. They are being extremely quiet, and that is not a good sign in my opinion. I am not trying to sound like a shill, I am just speaking the truth straight up and direct. I want to hear from the GameStop board as to what their plan for the short and long term are, because obviously the crypto marketplace initiative came and went faster than I would with Scarlett Johansson. We need affirmation that the company at minimum has viable plan, because right now they are hemorrhaging cash too quickly, and that is very concerning, as their only other means to raise money is through investors, which will screw us up. You guys know I want nothing but the best for these companies, so I hope to hear positive news. With that said, I want to thank you guys for watching my video. I hope to see you on the next one. Seriously though, come and check out my Discord, we are absolutely killing it there day in and out. All the alerts are available to anyone that joins up right now, so click the link and join the big leagues. With that said, have a great rest of your day and to the moon.